The stock market being a major component in the financial sector of most developing economies such as Nigeria serves a pivotal role in contributing towards economic growth through diversification, mobilizing and pooling of savings from different investors and availing them to companies for optimal utilization. Nigerian exchange group has remained robust in 2022 despite economic crisis facing the global market, with the all share index closing above the 50,000 basis point threshold at the end of tradings on Thursday. Today on the show, we appraise the market performance so far this year, and we have joining us virtually from Lagos, the MD and CEO of APT Securities and Funds Limited, Dr. Kashim Kurfi. Good morning, and thanks for joining us from Lagos.
Yeah, good morning. Thank you for having me.
Thank you, Dr. Kurfi. I hope you have a dry day as we have in Abuja this morning.
Yes, we have.
Uh, Thank you very much. We have seen the Nigerian stock market, the Nigerian exchange, particularly trend very differently from, despite the global headwinds, the rising inflation, and the worsening economic situation across the globe, occasioned partly, of course, by the Russian-Ukrainian war. Can you tell us why the market seemed to have performed fairly above the economic headwinds?
Well, yes, the market performed above the other sectors, financial sector in particular, because it stands to be the best alternative as of today to hedge against the inflation. If you look at the money market, the treasury bill, the bonds, they are all running at less than 15%. And when you compare a country that have an inflation almost close to 20%, that will not be the best alternative to hedge against the inflation. So equity market, capital markets stand at the better alternative, and that is why people are investing into it. And this is for the all share index. Individual stocks have gained up to 50%. Some stock gain 30%, some stock gain 40%, and this give a relief to the investor that this is the way to hide their investment and to hedge against the inflation.
All right. So with the current performance of the market now as it is, and judging it against the backdrop of the current economic climate, is this a ray of hope for people and of course investors that we might be able to survive the current economic hardships?
Of course, it's a ray of hope because remember in 2020, as at this time, all share index were in negative. But within the last quarter of the year, 2020, all share index gained 50%. So it shows you that now, with the current situation that we have about 17 to 20%, by the end of the year, this can even double. So it stands as a relief and hedging against the inflation because as at today, nobody can tell you that by the end of the year, the inflation will remain as it is today. We are seeing that the inflation is likely going to repeat 2005 when our inflation hit 24%.
Okay, Doctor. There had been predictions by other analysts that usually preceding an election year, the market does tend to perform better in the first half, and as we approach the second half, when political activities begin to heat up, the market also begin to take a nosedive. But from what you have seen and the situation in Nigeria, and of course the global situations where interest rates seem to be returning to pre-pandemic periods in the Americas and in Europe, are we likely to see a reversal of the current trend in the market?
No, we are not likely going to witness that. The reason is very obvious. In the past, we had foreign investors who control up to 50-55% of market transaction. Today, as I'm talking to you, foreign investors play less than 20%. Most of them have left the country because of the lack of foreign exchange to bail out. Therefore, we are the domestic that play the market, and the domestic have confidence of the economy, and we know our trend, and we know that not much expect to change in view of the fact that either of the two major parties have people that are more friendly to the market, and they have said it point blank that most of the issue that is holding the economy, like NNPC and what have you, they are going to be privatized. So if they do so, the economy will be much better, and therefore the local investors, particularly the pension industry, that are Nigerians, invest Nigerian money, are not likely to have any negative terrain up to the election period.
Just a quick follow-up to that, Doctor. If you say most of the foreign investors have left, and we are talking about 20%, by the way, it appears that even the 20% we have behind are those who have not been able to find dollar. Don't you think that if our dollar situation improves, that 20% is likely to also pull out?
How will you improve the dollar? You can only improve the dollar if you have more to export, and we have less to export. And even the very few crude oil that we export, we convert the dollar importing the refined product into the country. So there is no much, and I do not envisage likely to have more improve in the foreign exchange that will liberalize the exchange rate. Therefore, the foreign investors that are already here, they have to remain here for the rest of the time. I don't see them going out.
All right, so with the current performance of the market, and just like you said, it's a ray of hope for a lot of us considering the current economic hardship. And as it's performing very well now, and it seems to be one of the best ways out, is there a fear that a lot of people might go into the market as it is right now, and then it falls to the danger of probably being oversaturated at one point?
Well, I still have more hope for the obvious reason that, look, you have two options. One option is to own foreign exchange. Another option to go to the capital market. Because money market will make you to have a negative return. Most of the banks today, they are giving you a single digit return, 9, 10%. For an inflation that is 20%, you are already down. So the only alternative for you is to own foreign exchange, which is very scarce to have. And you can be doof because you are not sure of the genuinity of the currency you are holding. But people are confident that if they invest into the equity at any given time, they can exit because the market is there available for them. And don't forget that even by the dividend yield, some of these companies, they give you a double-digit return. And therefore, it encourages more people to invest into the market, and we are likely going to see more investment into the market before the end of the year.
Thank you very much. We've been speaking with the MDC of APT Securities and Fund Limited, Dr. Kashim Kurfi. It's a pleasure to have had you join us this morning and provide those insightful perspective on Trust TV this morning.
I'm happy to be with you. Thank you.
Do have a lovely day ahead. Thank you very much.